He claims that Bruce Akamizu, a representative of the Japan Bullion Market Association, is hearing a short squeeze in silver prices. It would appear that no one in London has silver, and the short-term leasing rates have soared by 20–30% if you're fortunate enough to locate a lender. Despite platinum's falling leasing rates, silver continues to exert pressure. Thus, there is undeniably a worldwide pinch. Representing Eric Young once more, Robert Gottlieb. Oh, quote, there is essentially no free-floating silver remaining once it goes to ETFs in India. That there is essentially no free-floating silver left is something Eric has never heard before, and he claims it is written by Gottlieb. A former executive at JP Morgan Bullion Bank is Robert Gottlieb. In my opinion, this is the world's biggest gold trader. The Federal Reserve is directly across the street from the JP Morgan Bullion Vault. Some people think they can communicate with other dimensions through a tunnel. It's exactly the same amount of stories underground. A rationale underlies that. You will encounter bedrock at that point. However, my friend Dana Samuelson is an amazing human being. Well, Robert what gives with the exorbitantly expensive lease rates and the 4-week backlog at refineries caused by excessive submissions? Is there an abundance of physical, or are there simply insufficient 1,000-ounce bars to fulfill demand? In response, Robert said that OTC silver will meet the need of Indian ETFs. There is almost no silver that is free-floating left. The assets held in vaults, such as those at the London Bullion Exchange, or those that are available for delivery, make up what is known as the free float. Everything is gone. That is his point of view. What I do want to emphasize, though, is that Inside Dana has posed an intriguing question. Oversubmission, he says, has put the refineries in a holding pattern that will last weeks. The refineries are currently the bottleneck, despite the fact that there is a flood of mine supply entering the market in the form of dirty bars. They have run out of silver to process. Therefore, they are unable to fulfill any further demand. So, as long as there is an increase in physical demand, there will be an increase in price pressure. A price increase is inevitable if the rate of silver refining cannot meet demand. The fact that the refineries are 4 weeks behind schedule is great news for silver investors. Accordingly, it isn't that silver is plentiful. In order to process them through a refinery, they are poured into 1,000-ounce bars. From these, you melt them to create coins, 10-ounce and 1-ounce bars, and everything else you can manufacture out of silver. Refineries also produce bars that contain 100 ounces, so there's a certain amount of silver and things that retailers can acquire. This point of suffocation, going ahead, a well-timed paper dump and a massive decline in London's silver free float, according to Hansa Czerny. On October 7th then, this occurred. Silver plummeted that day. The September numbers are intriguing, and LBMA has just revealed them. So this meme vanished into thin air, and you're expected to act as if everything is all right. The borrowing cost for SLV iShares Silver Trust is presently above 12%. October 8th was the date of that. The borrowing fee from Make Gold Great is still going down, and there are no more silver SLV shares to borrow. Now, 12.34% for the extremely short-sighted individuals. Allow me to make a point. Being short causes you a lot of pain when the price increases. Leverage makes the discomfort worse, and it grows worse with time. In a typical situation, they would be crushed from all sides. Here, the typical borrowing cost is somewhere about 0.5% or perhaps 0.5%. They're suddenly paying 9%, 10%, 11%, and 12.34% on top of the losses they're already facing. It has been steadily climbing as of late, reaching 2.5%. Now, I'm curious as to where they receive the shares that they sell into the market due to going short. They just borrow them and resell them instead of owning them. They get them on loan from the brokerage house, who acts as their broker. The brokerage house must be asking where they obtain these. You shouldn't expect them to lend you a large number of shares from their own portfolio. Brokerage houses have the legal authority to secretly borrow shares from anyone with a margin-enabled trading account. Your shares have been borrowed and sold into the market, so you can assume you own stock or some of this SLV or GLD, but in reality, you don't. They should be paid back, and they are. However, the short sellers are losing money due to the increasing prices, and to make matters worse, they are also paying interest on top of it all. A really intriguing thing, then, is going to happen. However, this upward trend with increasingly higher closes for successive candles suggests that this pattern may persist. Tim, once again, I fear the paper market is about to collapse due to hacking. Stops are useless for short sellers in the event that quoting interrupts. Therefore, the quotations will no longer function once they set a stop. Skipping the EU stop and continuing on up is an option for short sellers who have minimized their losses in the event of a gap up. Plus, it remained motionless for a solid 15 minutes. For about 15 minutes, IG.com halted quoting spot silver from Monaco 64. Apparently, quotations were no longer provided by the London bullion institutions. Now it's back on. Little fishers are appearing. Turd Ferguson, whose real name is Craig Hemke, is an anchor for TF Metals Report. It seems like a truly historic moment is coming our way very soon. Despite a historic backwardation, spot silver is up $1.40, and futures for the front month of December 25 are up barely 20 cents. For the next several days, you might want to keep an eye on this price of $1.12. An example of backwardation in a futures contract would be paying more for delivery now than at some point in the future. And that is the current situation. People are in a hurry to get their hands on silver. This occurred at 8:56 a.m. on October 9th at 11:42, which is just a few hours after the silver backwardation alarm update, according to Bob Coleman. The gap between silver spot prices and silver futures for December is $2.50. It altered that much in that little period. Hans Ackernay, let's go on. If a distributor recognized by the Royal Canadian Mint and a Canadian Precious Metals Exchange is involved, it may be an indication that the international trade of tangible precious metals is becoming increasingly significant. Plus, he's retweeting that a Canadian precious metals merchant named Mr. Yuppie has halted all metal shipments bound for the US. Hey, what's happening? I made this chart, and it seems a bit strange. Why? Because intraday price is not available on stock charts when you go back to January 18th, 1980. The close is all they have. That is the information they have. Thus, 49.45 was the opening price, 49.45 was the high, 49.49 was the low, and 49.45 was the close. So it's merely one line. I wanted to show you this since it was the previous high in 1980, and people still talk about it. Yes, that is the peak. With everything out of the way, according to Peter Spina, silver hit a new all-time high in London, surpassing the previous record close from January 1980, 49.45, and closing at 49.68, rounded. Intraday silver prices are poised to surpass those established on January 18th, 1980. The price is $52.80 on the Chicago Board of Trade. And so, not long ago I created this chart. Oh, this all starts with last Monday. The open is the thick portion at the bottom of a hollow body candle like this one, and the wicks that may or may not protrude from either end represent the intraday price action as prices rise and fall. This should help anybody who is unfamiliar with candle reading. Oh, and the close is located on top of the adipose tissue. The open, intraday, and close are represented by black candles, with the latter located near the bottom. So it's Monday through Thursday, then Friday, then Monday through Tuesday, then Wednesday, and Thursday, and bang! The price dropped substantially and ended the day below its opening as a result of an event or change. Having said that, it was still better than the end of the day before. Thus, this has still maintained its upward trend when looking at it from a closing basis. On the other hand, this is what we call a shooting star. It portends disaster. It's not intended to be a good indication, technically. Whatever the case may be, the fact that it closed higher than its prior close means that it is still an uptrend. Everyone sees this and immediately accuses it of manipulation. Manipulation must be involved. Yes, it was in this specific instance. Additionally, I believe I have proof of this. What transpired is what I believe to have occurred. Therefore, Bob Coleman, CME margin rise warning. The margin requirement for gold is 5.8% and silver is 9.3% according to a COMEX. I think what occurred was that it opened and then, after maybe a small tumble, started to take off like a rocket, and that was about it. They make the announcement about the revised margin criteria. For those who are invested in futures, the instrument from which the paper market derives the spot price, what does this mean? So all these commodities exchange gamblers have these really leveraged positions, and then they receive a margin demand, which is essentially a margin call. The only two options are to sell off some of their holdings or cough up the cash. This results in sales pressure. Accordingly, if they made the announcement there, the market would have been flooded with sellers until it finally closed. So forced liquidation is not an issue. Tomorrow, the brokerage house will collect the funds or sell off some of their position if they haven't already done so, and they will retain whatever is necessary. However, that is irrelevant. I was the first to notice this 45-year cup and handle. From 2012 all the way up until 2024, everyone's attention was fixed on this cup and handle. After that, as I warned, a slingshot move from $25 to $49 is imminent upon its breakout of this resistance line. Quite large. I wanted to prove to you, nevertheless, that I gave it my all. The up and down arrows can only be used to move the blue line 1 pixel at a time. Consequently, I did my utmost to get this on 49.45. The closest I got was 49.32. As this line terminated at the pixel underneath it, the overlap is not actually an overlap. Whatever the case may be, it reveals a small space that appears to be touching. Having said that, the chart is linear, where there is a steady percentage shift. Consequently, the percentage change from the previous inch to the current one is the same for every inch of space here. The numerals at the top are compressed while the ones at the bottom are expanded. A linear chart displays the change as a constant value rather than a percentage. You can now see a clear chasm as a result of the bottom expanding and the top expanding, and this consistent quantity change. Now that we've passed the 2011 high, the only remaining gap is a few cents. We've essentially finished the 45-year cup and handle pattern, which predicts silver prices in the triple digits, and I'm forecasting they'll be in the mid-30s, so